Question 1. An individual who has a pre-existing condition and is enrolling in a new group health insurance plan may find coverage for that condition delayed by which of the following? A. Probationary period. B. Elimination period. C. Grace period. D. Free look period. Answer: A. Probationary period. Explanation: a probationary period is a waiting period, typically 30 to 90 days, that must pass before an employee is eligible for group health insurance coverage. This period is used by insurers to reduce adverse selection and ensure that an employee intends to stay with the company before benefits begin. For example, if an employee has a pre-existing condition, the probationary period might delay when that condition is covered under the new group plan. Remember, this is about eligibility to join the plan, not about waiting for benefits to pay out after an event. Question 2. Which type of health insurance plan typically offers the lowest out-of-pocket costs for in-network care but requires referrals to see specialists? A. Preferred Provider Organization, PPO. B. Health Maintenance Organization, HMO. C. Point of Service, POS. D. Indemnity Plan. Answer: B. Health Maintenance Organization, HMO. Explanation: an HMO is characterized by its emphasis on preventive care and cost containment, achieved by requiring members to select a primary care physician, PCP, within the network. This PCP acts as a gatekeeper, coordinating all care and issuing referrals for specialists, which helps keep costs low for in-network services. Unlike PPOs, HMOs generally do not cover out-of-network care, which explains their lower premiums and in-network out-of-pocket costs. Think of an HMO as having one main doctor who directs all your healthcare decisions to keep things efficient and affordable. Question 3. Under the Affordable Care Act, ACA, which of the following is not an essential health benefit category? A. Maternity and newborn care. B. Pediatric services, including oral and vision care. C. Cosmetic surgery for aesthetic enhancement. D. Prescription drugs. Answer: C. Cosmetic surgery for aesthetic enhancement. Explanation: the Affordable Care Act, ACA, mandates that certain essential health benefits must be covered by health plans sold on the marketplace, ensuring comprehensive coverage for consumers. Cosmetic surgery for aesthetic enhancement is generally considered an elective procedure and is not listed among these 10 required categories. These essential benefits ensure access to a broad range of services, including emergency services, hospitalization, and mental health care, making sure foundational health needs are met. Remember, essential means necessary for health, not elective or purely cosmetic. Question 4. An insured's health policy includes a provision that states if the insured changes to a more hazardous occupation, benefits may be reduced, or premiums may be increased. What is this provision called? A. Misstatement of age or sex. B. Change of occupation. C. Relation of earnings to insurance. D. Legal actions. Answer: B. Change of occupation. Explanation: the change of occupation provision in a health insurance policy allows the insurer to adjust benefits or premiums if the insured's job changes to one that is more or less hazardous. This provision protects the insurer from increased risk exposure without proper adjustment to the policy's terms. For instance, if an insured changes from an office job to a construction job, the insurer might reduce future disability benefits because of the higher risk of injury. It's a way for the insurer to maintain fair risk assessment throughout the policy's life. Question 5. What is the primary purpose of the Coordination of Benefits, COB, provision in group health insurance? A. To ensure that the insured receives benefits from all active policies. B. To prevent the insured from receiving more than 100% of the actual medical expenses. C. To determine which insurer is primary and which is secondary when an insured has multiple policies. D. To allow insurers to share the cost of claims equally among all participating plans. Answer: B. To prevent the insured from receiving more than 100% of the actual medical expenses. Explanation: the primary purpose of the coordination of benefits (COB) provision, particularly in group health plans, is to prevent overinsurance, meaning an insured cannot collect more than the actual medical expenses incurred. When an individual has coverage under 2 or more group health plans, COB rules establish the order of payment, designating one plan as primary and the others as secondary to ensure total reimbursement does not exceed the total cost of care. This prevents financial gain from an illness or injury, maintaining the principle of indemnity in health insurance. Question 6. All of the following are characteristics of preferred provider organizations, PPOs, except A. Members pay a higher percentage of costs for out-of-network care. B. Members are required to choose a primary care physician, PCP. C. Members do not need a referral to see a specialist. D. Providers are paid on a fee-for-service basis. Answer: B. Members are required to choose a primary care physician, PCP. Explanation: unlike health maintenance organizations, HMOs, PPOs typically do not require members to choose a primary care physician, PCP. Members can see any doctor or specialist, though they receive higher benefits and pay lower costs when they use providers within the PPO's network. While they offer more flexibility by allowing out-of-network care, it comes at a higher cost to the member, reflecting the trade-off between choice and expense. Remember, PPOs offer more freedom, but that freedom usually comes with a higher price tag if you go outside the network. Question 7. Which Medicare Part helps pay for inpatient hospital care, skilled nursing facility care, hospice care, and home health care? A. Medicare Part A. B. Medicare Part B. C. Medicare Part C. D. Medicare Part D. Answer: A. Medicare Part A. Explanation: Medicare Part A, also known as hospital insurance, primarily covers inpatient care in hospitals, skilled nursing facilities, hospice care, and some home health care services. Most people do not pay a premium for Part A if they or their spouse paid Medicare taxes through employment for a specified period. This part is crucial for covering significant institutional medical expenses, acting as foundational coverage for many seniors. Think of Part A as covering the bed in a hospital or nursing facility. Question 8. An insured has a health insurance policy with a deductible of $1,000 and an 80/20 coinsurance clause. If the insured incurs $5,000 in covered medical expenses, how much will the insurance company pay? A. $3,200. B. $4,000. C. $3,800. D. $4,800. Answer: A. $3,200. Explanation: first, the insured must pay the deductible. After the $1,000 deductible is met from the $5,000 expense, $4,000 remains. Then, the coinsurance applies, where the insurance company pays 80% of the remaining amount, and the insured pays 20%. So, 80% of $4,000 is $3,200, which is the amount the insurance company will pay. This setup illustrates how deductibles and coinsurance work together to share the cost between the insured and the insurer. Question 9. What is the main purpose of an elimination period in a disability income policy? A. To allow the insurer to investigate the claim. B. To reduce small claims and the moral hazard associated with malingering. C. To determine the insured's eligibility for benefits. D. To prevent the insured from collecting benefits for pre-existing conditions. Answer: B. To reduce small claims and the moral hazard associated with malingering. Explanation: an elimination period, also known as a waiting period, is the length of time an insured must be disabled before disability income benefits begin. Its primary purpose is to reduce the number of small claims and deter individuals from feigning or exaggerating an illness or injury, malingering, to collect benefits for short-term disabilities. For example, if a policy has a 90-day elimination period, the insured must be disabled for 90 days before any payments are made. This period acts as a form of deductible in terms of time, helping to lower premiums by eliminating the insurer's liability for brief disabilities. Question 10. The provision in a health insurance policy that prevents the insurer from denying a claim due to misstatements on the application after the policy has been in force for a specific period. B. Reinstatement provision. C. Incontestability clause. D. Legal actions provision. D. Usually 2 or 3 years, is known as the A. Grace period. Answer: C. Incontestability clause. Explanation: the incontestability clause states that after a health insurance policy has been in force for a specified period, typically 2 years, the insurer cannot deny a claim or void the policy due to misstatements made by the insured on the application, unless those misstatements were fraudulent. This provision protects the policyholder from an insurer finding minor inaccuracies years later and canceling coverage. For instance, if you unintentionally listed an incorrect past address, the insurer generally cannot deny a claim based on that error after the incontestability period has passed. It provides security for the insured that their coverage is solid after a reasonable time. Question 11. Which type of care is not typically covered by a standard major medical insurance policy? A. Hospital room and board. B. Prescription drugs. C. Routine dental checkups. D. Physician services. Answer: C. Routine dental checkups. Explanation: standard major medical insurance policies are designed to cover significant medical expenses, such as hospital stays, physician services, and prescription drugs, resulting from illness or injury. Routine dental checkups, cleanings, and other preventative or corrective dental work are typically covered under a separate dental insurance policy. While some major medical plans might include limited dental coverage for accidental injuries, comprehensive dental care is usually distinct. Always review a policy's specific coverage details, but generally, dental care is separate from general medical. Question 12. All of the following are typical benefits of a long-term care (LTC) insurance policy except A. Home health care. B. Adult day care. C. Acute care in a hospital. D. Nursing home care. Answer: C. Acute care in a hospital. Explanation: long-term care (LTC) insurance is designed to cover the costs associated with chronic illnesses or disabilities that require assistance with daily living activities over an extended period. This includes services like home health care, adult day care, and skilled nursing or assisted living facility care. Acute care, which refers to short-term medical treatment for severe illness or injury typically provided in a hospital, falls under the coverage of standard health insurance or Medicare, not LTC insurance. LTC focuses on custodial and personal care needs, not immediate medical emergencies. Question 13. Under the Affordable Care Act, ACA, what is the maximum age an adult child can remain on a parent's health insurance policy? A. 22. B. 26. C. 28. D. 30. Answer: B. 26. Explanation: the Affordable Care Act, ACA, introduced a provision allowing young adults to remain on their parents' health insurance plans until age 26, regardless of whether they are married, financially dependent, or live with their parents. This provision significantly expanded coverage for young adults who might otherwise lack health insurance, providing a safety net during a transitional period in their lives. For example, a recent college graduate can stay on their parents' plan until their 26th birthday while they are seeking employment or navigating their career. This is a key ACA benefit for many families. Question 14. What type of disability would prevent an insured from performing duties of any occupation for which they are reasonably suited by education, training, or experience? A. Partial disability. B. Residual disability. C. Total disability. D. Presumptive disability. Answer: C. Total disability. Explanation: in a disability income policy, total disability is defined by the insured's inability to perform the duties of their own occupation, or in some stricter definitions, any occupation for which they are reasonably suited by education, training, or experience. This definition is crucial because it determines whether an insured qualifies for full disability benefits. A partial disability, by contrast, means they can perform some duties but not all, resulting in partial benefits. Understanding these definitions is vital as they dictate benefit eligibility and amount. Question 15. Which of the following is not a type of Medicare supplement, Medigap, policy? A. Plan A. B. Plan B. C. Plan C. D. Plan E. Answer: D. Plan E. Explanation: Medicare supplement, Medigap, plans are standardized by federal law and identified by letters A through N. Each lettered plan offers a different set of benefits to help cover out-of-pocket costs not paid by original Medicare, Parts A and B, such as deductibles, copayments, and coinsurance. While plans A, B, C, and D are standard Medigap plans, Plan E is not a currently offered or recognized standardized Medigap plan. It's important to know the standardized Medigap plans by their letter designations as they are consistent across most states. Question 16. The provision in a health insurance policy that states the period of time for which a premium has been paid, during which coverage will remain in effect even if the policyholder fails to pay the next premium due, is called the A. Reinstatement period. B. Probationary period. C. Grace period. D. Free look period. Answer: C. Grace period. Explanation: the grace period is a specified length of time, typically 7, 10, or 31 days, following the premium due date during which the policy remains in force even if the premium is not paid. If a claim occurs during this period, the insurer will pay the claim, but the overdue premium may be deducted from the benefit. This provision is designed to prevent unintentional policy lapse due to a slight delay in premium payment. Think of it as a small safety net to keep your coverage active for a little while longer if you forget to pay on time. Question 17. Which of the following statements about group health insurance is generally true? A. Individual underwriting is required for each member. B. Premiums are typically higher than for individual policies. C. Coverage usually ends when employment ends. D. Pre-existing conditions are never covered. Answer: C. Coverage usually ends when employment ends. Explanation: group health insurance is tied to employment or membership in a qualifying group, meaning coverage generally ceases when an individual leaves the group, though options like COBRA may provide a temporary extension. Unlike individual policies, group plans often do not require individual underwriting, and premiums are typically lower due to the larger risk pool. While pre-existing conditions were once a major concern, the ACA generally prohibits denial of coverage or increased premiums for pre-existing conditions in most group plans. Question 18. An individual's health insurance policy contains a provision that allows the insurer to reduce benefits if the insured has coverage for the same expenses with another insurer, without notifying the first insurer. This is known as A. Coordination of benefits. B. Other insurance with this insurer. C. Other insurance with other insurers. D. Relation of earnings to insurance. Answer: C. Other insurance with other insurers. Explanation: the other insurance with other insurers provision allows an insurer to limit its liability if the insured has multiple policies from different insurers covering the same loss, and the insured failed to notify the primary insurer of the additional coverage. This provision helps prevent overinsurance by ensuring that the combined benefits from all policies do not exceed the actual expenses incurred. It's a way for insurers to manage their exposure when a policyholder has multiple active policies without their knowledge. Question 19. All of the following are benefits of a health savings account, HSA, except A. Tax-deductible contributions. B. Tax-free withdrawals for qualified medical expenses. C. Funds can be used for non-medical expenses without penalty at any age. D. Funds roll over year to year and accumulate interest tax-free. Answer: C. Funds can be used for non-medical expenses without penalty at any age. Explanation: Health savings accounts, HSAs, offer significant tax advantages. Contributions are tax-deductible, funds grow tax-free, and withdrawals for qualified medical expenses are tax-free. However, if funds are withdrawn for non-medical expenses before age 65, they are subject to income tax and a 20% penalty. After age 65, withdrawals for non-medical expenses are taxed as ordinary income but without the penalty. HSAs are designed to encourage saving for healthcare costs while providing flexibility and tax benefits. Question 20. What is the primary purpose of the free look period in a health insurance policy? A. To allow the insurer to review the application and conduct underwriting. B. To give the policyholder a specified period to review the policy and return it for a full refund if dissatisfied. C. To allow the policyholder to make changes to the policy's terms without penalty. D. To provide temporary coverage while the application is being processed. Answer: B. To give the policyholder a specified period to review the policy and return it for a full refund if dissatisfied. Explanation: The free look period, typically 10 days, or sometimes longer for seniors, is a mandatory provision that gives the policyholder a specified time frame after receiving the policy to review its terms and conditions. If they are not satisfied for any reason, they can return the policy to the insurer for a full refund of premiums paid. This ensures that consumers are not pressured into purchasing a policy they do not understand or want. It's like a risk-free trial period for your insurance. Question 21. Which type of policy would provide an income for a specified period, or for the insured's lifetime, if they become totally disabled? A. Accidental death and dismemberment, AD&D. B. Medical expense. C. Disability income. D. Long-term care. Answer: C. Disability income. Explanation: A disability income policy is specifically designed to replace a portion of an insured's earned income if they become disabled and are unable to work. Benefits are paid as a regular income stream, e.g., monthly, for a specified period or, for long-term policies, potentially for the remainder of the insured's life if the disability is permanent. This policy helps protect an individual's financial stability when their ability to earn a living is interrupted by illness or injury. Think of it as income replacement when you can't work due to health issues. Question 22. Which of the following statements regarding Medicaid is true? A. It is a federal program for individuals age 65 or older. B. It provides healthcare coverage for low-income individuals and families. C. It is a private insurance plan offered through employers. D. Eligibility is based solely on a person's work history. Answer: B. It provides healthcare coverage for low-income individuals and families. Explanation: Medicaid is a joint federal and state program that provides healthcare coverage to certain low-income individuals and families, including children, pregnant women, the elderly, and people with disabilities. Unlike Medicare, which is primarily for those 65 and older or with certain disabilities, Medicaid's eligibility is largely based on financial need, not work history. It acts as a crucial safety net, ensuring access to medical services for those who cannot afford them. Question 23. What is the main difference between a fully insured plan and a self-funded plan for group health insurance? A. Fully insured plans are regulated by ERISA, while self-funded plans are not. B. In a fully insured plan, the employer bears the risk of claims, while in a self-funded plan, the insurer bears the risk. C. In a fully insured plan, the insurer bears the risk of claims, while in a self-funded plan, the employer bears the risk. D. Self-funded plans are only available to small businesses, while fully insured plans are for large corporations. Answer: C. In a fully insured plan, the insurer bears the risk of claims, while in a self-funded plan, the employer bears the risk. Explanation: the fundamental difference between a fully insured plan and a self-funded plan lies in who assumes the financial risk for paying claims. In a fully insured plan, the employer pays premiums to an insurance company, and the insurer takes on the responsibility for paying all eligible claims. In contrast, with a self-funded plan, the employer directly pays for employees' medical expenses out of its own assets, thereby bearing the financial risk of claims. While self-funded employers may use an ASO, administrative services only, agreement with an insurer to process claims, the employer remains financially responsible. Question 24. A health insurance policy typically contains a provision that states if the insured misstates their age or sex, the benefits payable under the policy will be adjusted to what the premium paid would have purchased at the correct age or sex. What is this provision called? A. Incontestability clause. B. Change of occupation. C. Misstatement of age or sex. D. Legal actions. Answer: C. Misstatement of age or sex. Explanation: the misstatement of age or sex provision allows the insurer to adjust the benefits payable under the policy if the insured's age or sex was incorrectly stated on the application. The policy will not be voided, but the benefits will be adjusted to reflect what the premium paid would have purchased at the correct age or sex. For example, if an insured stated they were younger than they actually were, the death benefit or disability income might be reduced because the premium paid was for a lower risk. This ensures fairness and actuarial soundness for the insurer while keeping the policy in force. Question 25. Which of the following statements regarding the tax implications of medical expense insurance for individuals is generally true? A. Premiums paid are always tax-deductible. B. Benefits received are generally tax-free. C. Benefits received are always taxable as income. D. Premiums are deductible only if paid by an employer. Answer: B. Benefits received are generally tax-free. Explanation: for individual health insurance policies, benefits received by the insured for medical expenses are generally tax-free, meaning they are not considered taxable income. While premiums for individual policies can sometimes be deducted as an itemized medical expense if they exceed a certain percentage of adjusted gross income, this is not always the case. The core tax advantage for the insured, in terms of receiving benefits, is their tax-exempt status. This is because these benefits are simply reimbursing for actual expenses, not providing a gain.